Today we will cook some nice and interesting dishes. We have such an interesting sector that affects the stock market. It's the M&A sector. We will talk about it a little later. In a nutshell, I want to invite you to one moment, join our YouTube channel. We have there about 5 films about the tech ecosystem, Ukrainians around the world, Silicon Valley. We filmed in London and other corners of the world. We communicate with founders, projects that want to go public in order to do M&A, i.e., not to go public, but rather to exit, and many different venture capital investors. We will talk a little further about the expertise of N5. We have created a great M&A platform that has been operating for 2 years. We deal with acquisitions and merge around the world in the financial, banking, and venture capital sectors. We will talk a little bit about this now. Remember, the main focus of tonight, it's IPO. IPO is return on investment. What did my colleagues talk about today, each from their own perspective? Pitchy was part of it, yes. And what happens? I put in $1, and how much do I make? A percentage or $10 on top. That's going to be our secret ingredient. And at the end of the evening, we're going to learn about this secret sauce recipe in the stock market and through the prism of M&A. M&A is divided into 2 parts: mergers and acquisitions. A very cool example on the white screen shows how in the 90s, a fairly large company, Exxon, met with Mobile in a secret room somewhere. And they created the great ExxonMobil that you know today. You can see what kind of return it is. Not the growth of their stock, but the percentage return of 10,000% since the M&A to everyone who held the stock before. This is purely a merger when 2 large companies merge into one large company. Well, we also have a great example of equity. We all know Facebook. And if we know and remember that Facebook and Instagram are now part of the ecosystem, they are 2 different companies. In this graph, we can see how this deal for Meta also brought additional value. Besides the fact that the 2 companies make money separately, right? The most interesting thing is Facebook, of course, made the most money because it immediately received additional data, user metadata. It made a lot of extra money from this in addition to what it earned from Instagram shares. There are 5 main reasons why large companies engage in mergers and acquisitions. Small company can buy a bigger company, but it's very rare buy smaller companies to have a certain kind of edutainment in addition to making money on it. Its value is to launch the price of the current company and find new users. Or Alexander Sadovyi. The most important benefit of any equity is that we can grow quite quickly, earn as fast as we can estimate, but through the prism of a large business owner when he buys a smaller one. And if we are observers of this, we can find out and see it in certain news. But we can set triggers for ourselves because going back, there are good cases. We see only good ones now, and a little later we will see real cases. Not everything is always beautiful. Some companies just don't go bankrupt. They are divided, but there are certain secret things, indicators for you investors in this sector to understand when you need to dump your shares, right? This is happening. And we will talk about it a little bit further. Moving on to the M&A sector, I would also like you to understand what types of M&A there are. And why do you need to know them? Because many companies that you are familiar with, such as Pepsi Cola, always market their products. Why is that? For example, I spoke to Stripe's founder last year, and privately, their budget for 2023 was about $3 billion for M&A deals.
As a rule, companies do not talk about this. It's a separate sector altogether. And I'm concerned about both medium sized, large corporations and people in the market. And why is this happening? They don't spend all this money, they buy the best projects from the market. There are five main reasons why large companies engage in mergers and acquisitions. The first and foremost reason is that a large corporation wants to take over a piece of a sector or enter a new region and not spend money on research or expansion of that market, but buy a ready made team. With technology, it's easier to do an audit, enter the market, and show your competitors and make money on public marketing. For example, Berkshire Hathaway, they have a conglomeration strategy. They usually enter the mergers and acquisition sector with someone, but the most popular sectors still, and there are horizontal and vertical. Mm, I've made a small, simple example of horizontal that we can all relate to. We all know and love the cartoon. Yes, we love cartoon production. We even grew up with many Disney cartoons. Disney took over Pixar in the late 90s. We see on the top right chart what was happening at this moment of acquisition. The prices of Walt Disney were in the range of $100, and Pixar was more than $300. But when the acquisition happened, we can see check how Disney's price was set, because Pixar as a separate company isn't on the public stock. Understood, right? We are looking at the chart for the year 23. The format is M&A deals, just as they say, zero profit, right? Well, we all love cartoons. Besides boosting prices, we have another most important thing that corporations do, that is to dominate in their sector. This deal flow was for domination in animation and storytelling in this industry. This is such an interesting, simple use case, but it contains details. One of the details is that those who held Pixar undoubtedly the price of moment deals. If you look after the fact of the stock buyback by this company, Walt Disney, it went slightly lower, but the price was boosted. Someone here found out what would happen, and the market makers boosted the price as well. They earned additional funds from this, but this is usually not for the end user. The end user can definitely lose here. We don't always profit because it's a very fine line. In public companies, there are different amounts and checks. What denomination are your shares? What type? There are many details to understand when you will get the price you need. It's actually the mean, not the end at this point. Vertical and also Mr. Sehi was talking about Amazon, and today we're going to look at it a little bit more. Amazon is also a 23-year-old stock. By the time of the boom, Amazon has also grown very much. It has made a very interesting move. And in 2015, we see the value of Amazon shares in this chart. He bought one of the largest publicly traded companies in America, which covered the American market, wolves and fruits. It was a chain that was on the same level as Walmart. Maybe. Walmart was struggling to buy. It is much more expensive. Enough funds are needed. But this was the second giant in the storytelling industry. So Amazon immediately took over a fairly large sector of offline shopping. A lot of small offline stores, were closing and are closing because Amazon just squeezed them out. It also squeezed out the second player in the sector, Walmart, on the market, but it took over a very large sector. That's why we see that since 2015, the moment when Wolford's, there was an equitization. The stocks also fell. Amazon's positions have grown significantly and are now in a completely different place. Regarding questions, yes, we will address questions at the end, but I would really like to highlight a few important points based on so how effective is M&A?
Yes, for the company itself, most companies, when engaging in M&A, look at three indicators for themselves.
The first thing people look at is in which market we are doing M&A, why we are doing it, and for what money, what kind of money. This is a whole procedure that is covered by extensive due diligence. Well, we are the final observers when we read the news. A company is planning even the news or buying.
We can have certain mindset identifiers for you. Oh, it's worth paying attention. Well, we'll look a little further at what to pay attention to in order to either buy or sell if you already own shares of this company. What is M&A in general, right? I also wanted to add for companies. Why am I talking about the company? You will understand how deals affect the stock value, whether they go up or down. Therefore, potential growth is an important factor for the company in a new market, in a new state, in a new segment to expand its product line. This is one of the first and most important triggers. If you understand that they are launching some very interesting product and they bought the market leader or the second position in this market, do you understand that with their capital, they will definitely take the first position? Usually they don't buy the first. Usually they buy the first among the top 5 companies. They also analyze, yes, for growth, storing funds. Of course, they save. They save on capturing new markets, on creating a new product, or more importantly, users, and the customer acquisition cost significantly decreases if you buy from some giant. And it already has. For example, 10 billion in sales over the last 5 years, or 2 million users. Those users who are not in your product. Innovation. One part of any company is the innovation team, especially those that have already been on the market for a long time. Always bring innovations into your products. Innovations that stir with fresh blood, with new technology and approaches. The modern approach, yes, many companies today buy and integrate AI optimization companies that focus on code optimization, optimization of business processes, optimization of HR. As strange as it may sound, right? That is potentially replace. Large companies especially engage in this because they save costs, speed up scaling and customer service. And this is quite a strong booster by innovation, diversification. Yes, this is an example of Facebook when it bought Instagram. It immediately has two additional monetization channels to the owners. Yes, and lastly, this quite strongly reinforces the company's position in the market, especially against competitors. When you are first, you are the first. And accordingly, we as end users see that this product most likely, yes, we are tracking there that everyone is using ChatGPT, but not many are actually using it. Raise your hand if you know using Anthropic Explodent. No one knows this, right? Yes, just 2 people. The technology nowadays for the end user. And maybe it's not so perfect, but for the corporate segment, it's just perfect, yes. ChatGPT for the end user. When we look at certain products and are not familiar with them, yes, it doesn't always allow us to determine which product is better.
Let's move on in this sector because the questions are later and the answers are also later. I think you will have questions anyway because there are very cool things here. How dynamic is the M&A industry in general? For a large corporation carries out, well, we come closer to us, right? To steal the elements of the secret interview, to the elements, what makes us buy these stocks? Did we buy something correctly there? We worried, didn't worry, but overlooked something. What do we need to pay attention to, right? What should we be focusing on? I'll immediately move on to the most interesting elements, to our secret sauce. We highlighted it. The most important thing in preparing the secret sauce and how it affects you when you select certain stocks for investment. This is monitoring the market, the sector, the industry. You need to clearly understand what industry you want to invest in if you want to do it yourself. Even on the basic level, yes, you need to come to your broker, dealer, or analyze and to give an expert opinion. Even ChatGPT can help you today. Basic information to communicate with market professionals. If you go with someone, this is a big help. If you go alone, please, it is very important. Choose a specific sector or sectors. Don't be unfocused. Second, analyze how healthy this sector is. It's very simple. Recently, a hedge fund came to us. They want to make a name for themselves in the gaming sector, plastic gaming. The trend, for example, between us is not mobile apps, but console and PC games and what the public wants. Public share prices, not mobile games. Mobile games make money in the moment. And large public companies make money on more sustainable types of games. They have a small budget, about 150 million. They want to do M&A, merging one acquisition. They will push the price up to getting to the IPO. We will talk about this in the fifth sector of the secret sauce. So the most important thing is to know the market analysis. What is growing? What is the market like? Dynamics. What can replace this market? Whether it's products or another big shopping spree, it's hard to find there. You'll see. You can choose there. For example, the food market sector, you look there delivering, you see that companies have not grown much over the last 10 to 5 years. That means something is happening there. It's not a completely healthy sector. Therefore, analyzing the sector is very important. Third, focus. You can find corporate announcements and reports in many companies. Every year, every quarter, there are sector-specific reports, investment reports, M&A reports. Often, large corporations even make announcements when you look carefully. So we remember the focus of the markets, focus analysis of these markets, how healthy they are, and then follow the corporate announcements of large companies such as the Big Four Group or similar. And the fourth one is keep an eye on investment bankers, investment houses, and in this sector, I'm talking about the sector now, not specifically about any companies. If you see that the market has revived after some, well, as my colleague has said, news, events, political aspects, economic aspects, you see how the sector reacts. The most recent, most interesting thing in my experience, as I have been doing this for 6 years, is my platform, which has been online for 2 years. We are launching 2 other products next year with other groups of funders. We are now involved in banking, fintech, venture, more than 300 businesses. Based on this, I have seen a very interesting insight over the past 6 years, which I would like to share today and share it's a fine line. I didn't want to write about it in my presentations, but I left it out. When we launch 2 more projects and 2 more platforms, we will focus on the US sector. That is, if you are a business owner in Europe and you want to do a systematic business of this format in the United States, you will find Welcome on the site, and as well as similar sectoral shares. What is it for? How to approach it, and what is it for? Because the most interesting thing I have seen over the last 6 years of active M&A deals is the companies that come to me. 5 types of investors come to me, and I work with B2B, not B2C, hedge funds, venture capital, family offices, corporate clients, and groups of corporate clients come to us planning to make a joint M&A product. They come and say, Igor, I want to buy 10 companies. I said, why? Well, we are planning to hit the IPO in 2 years. Okay, someone wants to buy 2, someone wants to buy 1. Such companies can potentially be tracked closer to their public release.
catch it because that's where the most money is being played. Oh, these are the first games. And there used to be such a popular thing as SPACs. There were a lot of them. And my colleague said today that there are a lot of scams and frauds in this market, right? In the SPAC market. And also, it was a trend that lasted for almost 20 years. Oh, yes. Also, who was imprisoned? Who was not imprisoned? Most were not. But the investors' money, those who went to his private office, made a lot of money. And this is all legal. And it's illegal when you do these facts. No, there is none. You just buy companies and, in fact, conduct incorrect authentication. But you can see the general sector. We have a calendar, and other stock exchanges also have calendars for when a company will go public. We remember that we need to monitor the sector and analyze the market. When did you see the calendar? You can understand, oh, this is the sector I wanted to enter, and I'm willing to take the risk. We say that other companies, sectors are on fire. That is, the market is alive and a player is coming out. As a rule, these are companies that are still in the pre-IPO stage and have a public launch on their calendar. Sectors are on fire. That is, the market is alive and a player is coming out. As a rule, these are companies that are still in the pre-IPO stage and have a public launch on their calendar. They have already analyzed the market. They are not fools. They know who is behind these companies. And you can even sometimes see the teasers of the expected eavesdropper. I once got caught, for example, there in 2020 when the COVID happened. Pitch deck, I talked to the founder of Revolut. 3 weeks ago, I heard how they are now. They didn't go to the IPO. I know their metrics are only through between investment bankers. Well, you would have bought Revolut when you heard the news that they were going to go public. You would have run people with a check for $1 million or $2 million, ready to go to their broker to get into the allocation of this deal because the news came. And this did not happen. But now, today, they also have such secret information. A new trend, they say we have 4 billion registrations. But these are not registrations that mean active clients. This is their stage, a market where they can grow, because they are planning to go IPO. Why? Because the British regulator issued them a banking license. They were approved. At first, they were waiting for it for 3 years. At first, they were told privately, well, we won't give it to you. They said, we're going to France. The regulator realized that it did not want to give away such a big player. And now they have given them a banking license and accepted them into the club. And now they will go on the IPO when they are monitoring. And is it possible to raise funds there? Analyze the first 4 blocks, and you will understand whether you need to go there or not. And there is also the so-called OTC desk. Sometimes in this format of any exchange, it is listed there, such half-life companies, and sometimes they have some growth there. I have already shown examples here. I will repeat. I was invited to participate in one company. I was offered a certain number of shares there. The company grew to a value of 700 million, but it didn't go on the IPO. But someone made quite a lot of money on IPO in the sector. Therefore, I recommend you, if you are interested in the M&A in the sector, therefore, I recommend that if you are interested in the M&A market and how it affects public prices, you can track information according to these 4 criteria. My recommendation is also to look at the release calendars. If anyone has any additional questions, we will answer them right away. You can also find me on Facebook and LinkedIn. I invite everyone to the M&A world. It's very interesting, very dynamic, and thank you for tonight.